All right, everyone, welcome back to Beyond the Headlines, episode 23, where me and Steve take a look at the news that happened this week, dive in to see what the market is actually saying. So, this week we're going to talk about retail. There seems to be kind of, I think, and I think Steve agrees, some under the hood action that could tell us the health of the consumer and kind of what that means going forward. We're going to talk about a little bit about the reverse carry trade. I was on vacation when Japan decided to destroy the entire market, which was super fun. And then also, we're going to talk about home builders. There's some home builder news coming out. So, Steve, it's been 2 weeks. It's been a nice big break.
I'm just focused. I want to talk about your hair. You got that cool little lip thing going right there. I
Nice.
can't focus on anything else. Fix that.
I'm
Okay, I'm just
trying.
kidding.
I just got out of the
Yeah,
shower here. There we
you're
go.
right. You picked a fun week to take off. So did Andy. It seems like whenever Andy takes a week off, something crazy happens. And that was last week. So we didn't really have much to talk about last week. I suppose we could kind of start with that. I mean, this market has a funny way of literally sucking in hedge funds, shorts, bears, whatever you want to call them, however big they are, however big that camp is, I don't know.
Yeah.
But this seems to be just yet another Lucy and the football Charlie Brown moment where the hedge funds went for the jugular with a very horrible technical breakdown in the indices. And then a little Fed jaw boning, couple of economic indicators, CPI, PPI, retail, and boom, you had 9 days just ripping the faces off the shorts again. And now we just kind of up here and pause. So personally, as a swing trader, I'm going into this weekend very flat. I sold anything I could today, this morning on Friday for whatever profits were there, and managed any other risks before stops were triggered. I just feel like these last 2 weeks have been such a blast. They call it the Kansas City Shuffle. You come up behind somebody and they don't see you, and you twist your neck. That's what happened to the short sellers last week and this week.
Yeah, and to people who haven't heard this already, I'd be shocked if you have, because again, we're a week late on this. But um, it was funny. Come Monday, I was on CNBC and called on to Trader TV and all kinds of stuff. So I had to do some reading about it. But a lot of people trying to figure out what happened. The long story short is there was what's called a carry trade between the U.S. and Japan. Essentially, just meant that the U.S. was paying a nice, healthy, call it 5% on your money in a T bill, nice and safe. And Japan, you could borrow for near zero because they had near zero interest rates there. So you could borrow money from one, convert that cash to US dollars, put it in an account somewhere else, and you essentially free money. Essentially, there's no free money out there. So that works when two things occurs. One, you want the Japanese dollar to constantly be being devalued, right? You because you're borrowing in Japanese yen. So if the yen is always tanking, then that's great. When you have to pay it back, the less money to pay back, that's great for you. Also, as long as they keep interest near that zero amount. So what happened was Japan came up over on a Sunday night for us, but Monday morning for them, and they said enough. They said we are going to raise interest rates and we are going to start defending our currency. So all of that money that you had borrowed is now increasing in value. So you're having a massive say you borrowed $1 million. Well, now that might be 1.2 million or 1.3 million because of the currency conversion that was changing. And you were paying zero on that debt before, and now you're paying a little bit. So what happens is a lot of people try to unwind these positions as quick as they can, but like the market always does, freaked out a bit, right? It went from yielding this 5% return to yielding 4.75%. It really wasn't a dramatic, you still have this carry trade, you can still make money off it. But again, like Steve was talking about, everyone panics, they run for the door. That causes this dramatic sell off in the market. That sell off was obviously bought up, and now we're going today. So the only chart I have to go over here, which I think is interesting, is looking at EWJ. For those who don't know, EWJ is just the Japanese index. So it's an ETF of essentially the Nikkei and Japan as a whole. So obviously got hit worse than most people, actually got locked limit down. So,
Hmm.
the Japan market stopped for the day. And then funny enough, unlike the US, Japan actually has, if it goes up too much, they stop it as well, which I will never understand. And then the next day it locked up. So had one day it locked down, the next day it locked up. It's craziness.
I got a funny story. When I first started trading, it was 1994 or 95, and I had a $5,000 account with Lind Waldock. It was a commodities futures account out of Chicago. Most of my orders were done over the phone and whatnot. And I would gravitate sometimes towards, the risky stuff. And you would have certain periods where, what was it? It was the hog, it was the quarterly hog count. And my wife's birthday was born, she was born on the same day that the quarterly third quarter pigs and snout hog report comes out, I believe. And I took a position going into that and woke up the next day and it was locked limit down. And it was my wife's birthday. And I was new to trading and I was trying so hard to be happy for her birthday. But when you just like, okay, I'm stuck, can't trade. And then the next day it was lock limit down again. And I was like, okay, I'm never going to do that again. It's kind of like going into earnings as a trader, but at least when you go into earnings as a stock trader, you get a chance to get out. Lock limit down, what Michael means is you open the computer and it says, sorry, there's no trades. Try again tomorrow. Circuit breaker. What are you going to do?
Yeah, and I get, and the U.S. has these rules as well. They're much looser than Japan's are. I think it's like a tiered system in the U.S. where they lock it for a certain period of time. And I studied all this up because the last time we actually saw that was during COVID. We saw these things trigger, but yeah, the lock limit up. I just on a equities exchange just kind of makes no sense to me. But it was funny because that kind of hurt a lot of speculators in both ways because they woke up long positions and they couldn't sell, and then they sold the next morning, and when it locked limit back up and it showed that it wasn't the end of the world, they couldn't buy. So you ended up missing both sides. But yeah, I have the chart here of EWJ. Again, this was the pretty epic down move that we had right here, and then ever since then we've just been trending higher. Now I think this is going to be, for me, I think the trade here, or the look, is pretty obvious and the same as the US markets, where you're kind of marking those prior highs and then you're marking these prior lows. And as long as we're kind of within this range, I'm just looking at this as probably going to remain a chop fest. I don't know what you think about. Probably don't trade Japan very much, but what do you think of this, Steve?
Mm. I think it looks just like our market, basically a bit overbought. Pretty resilient cat bounce. I'm hearing music. Is that like a commercial or something?
Oh, well, it's gone now. That was just some background music. I think of a video. I think it was on one of these tabs. Hopefully, we don't get striked for that, but we'll keep going. I've got some tabs open here for, yeah, it was probably this, whatever this thing is here. That's okay. I'm sorry, YouTube, if something got stolen, but you don't hear it now, though, do you? Oh, no, I muted you instead. There we go. We'll edit that bit out.
Much better. Okay,
Okay.
much better.
Yeah.
So back to the Japan chart, I think it just mirrors what we're doing in our markets and just nails home the point that the correlation is that, and that is what in fact people are watching. And like you said, free money is fun until it's not free anymore,
Hmm.
and that starts to induce panic. But the flip side of that story is it didn't last long because that was the bounce. They kind of reversed course quickly. It's amazing how the market can hold policymakers hostage sometimes if they throw a fit on prices and everybody's portfolio starts to fall and you get some Friday night cigar back corner meetings and before you know it, reverse course for now.
Yeah, and what I'm looking at, and we can talk about the SPY with this as well, just we'll do a broad market thing before we go into the stories. I think what's important is what happens on the first pullback, because there will be a pullback at some point, just the way markets
Hmm.
work. If we pull in and we find buyers at a higher price, that means
Hmm.
there's more people who are kind of scared and sad that they missed this low. So you have those FOMO buyers come in. Or are we going to start to see selling up here because people are relieved that, before this massive drop, it's come back to their price? So, again, that plus I talked about this, and we can talk about this on a future episode. The election, because you guys are in an election year, the seasonality is really, really clear on election years, where from now until I think it's November, you guys have your election. There's just it's a choppy mess, right? They've studied these going all the way back to 1950, and it's always just kind of a chop fest here. While this candidate's leading, and then that one's leading, and what do the polls say, and what's actually going to happen, all the noise and BS you get from
And then
media
you
and everything.
genuinely have the Fed back off a little bit because they don't want to be appearing political.
Yeah. So it creates this just non-committal choppy mess where, hedge funds aren't looking to buy, they're not looking to sell, they're just looking to wait. And then in November, you get this push higher. So if we are going to follow that seasonality, then being stuck within this range on the S&P 500, it just makes sense, right? It's just the way that combined with what we saw in the market. That's my theory anyway. Could be completely wrong. We could just rip new highs. Who knows? But my theory is I'm just going to expect choppiness for longer and just kind of play accordingly. So, all
Hmm.
right. Right, let's pop into retail. So it was funny when Steve came in the room, whatever, yeah, this thing was playing in the background. The he said, "Oh, I want to talk about Walmart and some signals that I think that might be showing us." And I showed him I already had this tab open where, so this is just a CNN article saying, "Hey, Americans are shopping; they're just going to Walmart." So we saw Walmart report earnings 2 days ago now. Yeah, or this yellow
Strong
vertical
chart.
line and a massive, massive gap up. So what do you want to chat with the people about when it comes to Walmart, Steve?
Well, I mean, they stole the headline from me. It's people still have to eat. They still need supplies. They still got to wash their clothes. And rather than going to Target, let's look at Target. Tale of two retailers, pretty much carrying the same thing. Walmart might carry a bit more food. I'm not sure, but TGT is in a downtrend.
Mm-hmm.
Got a bit of a bit of a bump from the retail numbers. And honestly, I'm just going to say I don't really trust a lot of these headline numbers, and I can back that up by saying just look at the revisions. Just look at the revisions. Every single month, there's a revision in the opposite direction of a strong first number. All right, I'm going to leave that with you guys.
Yeah.
But Target is not benefiting from the strong, quote unquote, strong retail numbers, and they're more, that's middle America, what, what do you call it? um, Middle
Well,
income America, whatever.
yeah.
So Walmart is attracting the pain, if you will, of the middle America income people, and they're downshifting and they're acting like a business, a small business. They're watching their expenses, watching their income. Their income's not going as far. So it's just a tale of exactly what we talk about here, beyond the headlines. Yes, retail numbers were good, if you believe them, but who's benefiting? Well, it's probably not Nordstrom and Macy's so much as it is Walmart. Costco's doing okay too. I mean, there's some value for the people, big families at Costco, so they're hanging in there.
Yeah, and um I think you can see the same thing looking from this chart here as well, where we have XLY, which is the consumer's discretionary sector. And I went out to a monthly chart just to show you how far we are below our all time highs on XLY, which again, so XLY, consumer discretionary, just think of stuff that you buy that you don't necessarily have to buy, right? Not food, clothing, blah, 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 but like, new iPad or something like that. And then you look at XLP, which is our consumer staples, and you can see that's breaking out to new all time highs. So looking at these two charts side by side can kind of give you often a good idea of where people are putting their money. If XLY is doing amazing and XLP isn't doing too well, then you know that people have discretionary money and discretionary income they're spending on things that they don't necessarily have to. If XLP is going very high and then XLY we see hasn't hit that all-time highs, it shows that people aren't necessarily they're not flush with cash. They're able to go places. And then again, this is something that I remember they even taught back in way back in university, which I'm trying to remember when I was in university, but I have a lot of gray in my beard, so it was a long time. And they talked about this Walmart indicator. Walmart, and I think Costco at the time, they said, as you generally don't want Walmart to be doing very, very well from a stock market point of view because people shop at Walmart when they can't shop anywhere else, right? Same with Costco. People shop there when they can't shop. People would rather go to a designer place to get their clothes than they would a place like Walmart. So you want to see people moving up that spending chain instead of down. So this could be, a little bit of a tell to say, hey, let's take a look at what's happening on
I,
this sector.
I don't say this as a joke because it's very serious, but I mean, there's a lot of families that are shopping at Costco on the weekend because they've got the Costco brunch. You know, step up, kids, try some of this. I'm not trying to be funny. It's kind of sad, but that's happening.
Yeah, and that's where we need to, that's as investors, we need to keep an eye on. We need to say, okay, certain things like even, there's an argument out there that Apple at this point is a staple, but I always looked at things like Harley Davidson, Hog. That's in my opinion, a pure form consumer discretionary stock, right? You're not buying a Harley Davidson to get around, right? You're buying it because you have your car, and then you have your Harley on top of your car in order to have a little bit of fun on the weekend. So start to look at stocks like this. If they end up being weak, then maybe that's a good place to play some relative weakness on those names where we play a little bit of relative strength on consumer staples, which are generally boring, but if they're going to be what's in play, that's where we need to put our focus. Another not great, I would say, economic indicator.
Mm,
New home construction plunges to the lowest level since May 2020. So this would also be something that would be kind of inflation adjacent, we could say. If you're not building homes, then the cost of homes and rents should stay high or move higher. And essentially, just looking at some of these consumer names, but like always, there seems to be just an ETF for everything nowadays. I don't know if it's because I'm getting old or what, but I just gravitate more to the ETFs. And this one is XHB. So this is a collection of the home builder stock. And I really want you guys to focus on what's happened over since this drop, right? So we talked about this drop that happened on the 5th when, again, Japan broke the market, and just the weak, lackluster bounce here versus we take something like the Qs and, the absolute kind of rocket ship that happened there. So what are
mhm.
you seeing when you look at this home
Yeah,
builders chart?
I'm seeing like you said, like I said earlier, a very resilient, springy dead cat bounce, not dead cat bounce, but a bounce in the market. I'm seeing a lackluster bounce in the home builders that is just relatively weak compared to the last week and a half in the Nasdaq and the S&P. It's tough out there. I live in San Diego, and we're like the fifth or sixth most expensive city to rent or own in. And geez, a city like ours, half the radius is ocean, so you've only got so much land to build out,
Mm.
and everybody wants to live here because of the weather. And I've got experience with my father in the 90s. If you want to build here, it's basically the mafia you got to go through and pay off. And not really, but there's a lot of regulations I'm referring to, a lot of environmental stuff, and they don't make it easy to build. And so um, you couple high regulations with low consumer velocity of their money and higher interest rates. It's a horrible backdrop, and I wouldn't be surprised if that technically is what you call like a right shoulder. That dead cat bounce is just kind of a weak right shoulder waiting for the next leg to drop down into that blue cloud line probably that you've got. That's my estimation.
And right, I like, and before we're, I guess, accused of being doomers, I like this kind of environment. I love when I see, and as a trader and investor, you guys should like it too. It's no fun when everything is just kind of shooting up all the time, and right, the market's just ho humming along. If you own a bunch of stuff already, great, you hold on to it, you have a plan. But what we're kind of showing you here is that tech is doing fantastic. We have the Qs and the SPY, which is mostly tech at this point, just rocketing higher, could be breaking all-time highs, who knows. And then you have these weaker sectors like retail, especially XLY, with that will do the consumer discretionary, right, the more pricier retail. And then we have XHB, and these aren't bouncing nearly as much. So if you're a trader, right, you have a pretty okay mandate here where you can then just take a look at what's relatively strong and what's relatively weak. If this is a head and shoulders tops in XHB, then you can take a look at. Again, I have to remember all these, even though I don't live in the country, but I know KB Homes is one. This looks, we had this massive drop, could barely get off the mat. I don't know. I'm sure Steve's looking up a
TOL,
couple other that's Toll Brothers, right?
Toll,
Yeah.
mm-hmm.
Yeah,
Lennar,
see,
LEN.
this Toll Brothers, I think, and this
This
line right here, this is Steve's,
it's
essentially the
gotten
Steve's 10-day period
yeah, it's
moving
gotten
average,
caught up in the net. Yeah, it's getting caught.
and just can't, right? I think so. I get asked all the time, hey, Mike, you talk about relative strength, relative weakness all the time. What metric to use for it? I think you can, eyeballing certain events to me makes a lot of sense. So, like all time highs, and then, but in this case, I'm eyeballing when I'm saying relatively weak to that Japan breaking the market low, right? And on Toll Brothers, you can see we're barely up from that. And we showed you how the cues, if you look at something like Nvidia, right, these things just went off like a rocket ship the moment that low happened. But yeah, you took it something like KB Homes, barely up from that price. I think Toll Brothers was even worse, barely up from this price. So if you're looking to trade, it may be, let me look at some technology and I can own that because, right, AI is amazing and it's doing the things that people said it would. And then let me take a look at things like Toll Brothers, and this may be just short. And speaking of something that Steve just kind of wanted to mention as a long, you also got gold breaking out here. So
Oh yeah, we got to finish with that.
yeah, I love, this is kind of my final statement on it. I love two-sided markets. They're just, when you can have something in your portfolio that you're short making you money and something else in your portfolio that you're long making you money, that's a nice trader's environment. When you have these everything going up all the time, that's just no fun for me. So I'm glad that we're seeing this because again, it gives me places to kind of hunt and peck.
It's always interesting. Gold's at all-time highs here trading, by the way, on a Friday. It's always interesting to see when gold gaps up strong into the weekend if it's going to follow through on, and because there's 2 days of really non-trading
Mm.
unless you're trading, you have a commodities account and you're trading contracts. But if you're trading the ETFs, the door is closed for a couple of days. The other story is for some reason, SLV is just the stepchild that doesn't get any attention. And with gold at all time highs, SLV can't get out of its own way.
Yeah.
Many theories on that, but it is what it is. We just follow price action. So you have to be aware that, if gold does get weak and you're counting on silver following, when gold rolls over, then silver is probably going to roll harder. So be careful.
Yeah, and I never thought about that. It being Friday, that makes a lot of sense. I would imagine this gap up and this continuation could be easily framed as the weekend's coming, and we all remember what happened a couple weekends ago. Maybe I add some gold to my portfolio as the weekend's coming because, as Steve mentioned, you can't really trade. So, let me add a little gold, a little defensive asset. Maybe if Japan decides to break something again, then at least I'll have that part of my portfolio that's making me a bit of money. So that makes a lot of sense. Same with, I've noticed TLT is actually finally starting to decouple from the markets a little bit, where it actually gapped up there on Friday and is again moving separate from the market, which me and Steve knows was the norm for the longest period of time. And that norm broke in 2020, and ever since then it's been stocks up, bonds up, where before if it was kind of stocks up, bonds down, and vice versa. So, all right, Steve, you got anything to leave the kids with? I think we did a good recap being back from vacation now.
No, that's pretty much where we are. I don't have a lot of conviction either way right now. I'm going to go light into the weekend.
Cool. All right. Yeah, same. My philosophy, just I mentioned with that range bound, and I think I'm going to stay this way until November, just based off the seasonality. I'm going to be buying the dip, selling the rip. I'm going to be less of a trend trader, which is what I normally do, and more of a give me a nice healthy pullback. I'll buy into that. Give me, something that's ripping too high. I'll sell into that and try to play this more kind of revision to the mean style. So as always, if you have made it this late in the video, I think we've deserved a little like and a retweet and all that kind of stuff. Share with your friends, tell your grandma, all that, and we will see you guys next week.
Yep.